So, Jharonne, let's start with you. Let's talk about retail's week. According to your research, 79% of the companies so far that have reported, they beat expectations. That sounds pretty positive, but yet we're kind of wringing our hands and we're keeping this close eye on retail because of the guidance. Where are we at when it comes to the retail sector?
Absolutely. So about 88 companies, which is over half of the companies that have reported earnings, have mentioned during their call that inflation is a big problem. And as a result, we received more negative guidance for the third quarter than we traditionally have this time for the first and second quarter of this year. So more retailers are warning us not to expect too much for them from the third quarter. But traditionally, we do see a slowdown in the third quarter ahead of the holiday season. And back to school season is already off to a great start, which has some correlation with holiday season and is in line with our LSEG data suggesting that the consumer will pick up for the fourth quarter.
All right, so we sped out some of the headwinds for the consumer, rising gas prices. We'll talk to John about that in a minute. Rising rates. And we didn't mention it right now, but credit card debt, over $1 trillion at a record high. So where is the consumer at today? Is the consumer stretched, or are they just putting more on their card and willing to spend even more? They're
willing to spend even more. In fact, we are starting to see some signs that things might actually be going back to normal.
Wait, what's normal, though?
Right. So we just saw the government report strong July U.S. retail sales, right? But that was all promotional driven. The average discount level went to the highest we've seen this year, which is the same level we saw in 2019 and 2018. Also, we saw Walmart for the first time saying that consumers are buying big ticket items. And we saw that consumers finally splurge on apparel, which we haven't seen in a while. We saw Ross and TJX smash those earnings expectations. So this is the first glimpse that we actually might be going back to the way things were in 2019.
So you said apparel, not sweatpants. So is return to the office, is that one of the possible tailwind for the retail sector?
Actually, the strong sales at Ulta tells us that, the consumer is all about the reopening and wants to look good. So yes, no, sweatpants are still strong. Lululemon is actually projected to be one of the biggest winners this earnings season.
But you can wear those pants with a jacket, but I digress. We have some of our colleagues that do that. John, great to have you here as well. I want to talk gas prices. So we're going to show the RBOB. That's wholesale gasoline prices, not the prices at the pump, but still, you've seen that go up about 10% over the last 3 months. Is that meaningful when we're talking to consumers, that kind of rise?
Look, nobody likes it, and there's nothing more in the consumer's face than gasoline prices, right? I mean, and thankfully there's cutthroat competition out there at the retail end of things, but not yet. At around where we are, just below $4 a gallon for most people. I know that you showed those crazy prices out west where they're having all kinds of different issues. But as long as we stay below $4, I think the consumer will hold up, and you'll still see the great amount of spending that was just referenced here. But once it goes above $4, that's when it starts to register with folks. That's when your SUV costs you $80 to $100 to fill it up, and it's a drain. It's like a tax on the consumer. They pull in their horns, it hits consumer confidence, and it's sort of the first brick in the road towards potential recession because of consumer spending, reacting to that higher gasoline price.
Yeah, we're just showing the map right there. So the retail price for regular unleaded, the average nationally, $3.88. You see the red part of the map, that's the West Coast, where it's actually above that $4 mark that you were talking about. I want to hit on that for a second with you, Jharonne. So last year, June of last year, we saw gas prices hit a record high. What trends did we see last year that might give us insight into this year if we continue to see gas prices go up?
Last year was different because retailers were still dealing with a lot of the supply issues and had to move a lot of the merchandise, and we saw a lot of discounting. Now we're seeing that, yes, retailers are managing the inventory levels better, and that's why you've actually seen that more companies are beating earnings estimates as opposed to missing. So it's a different situation. But yes, I'm in agreement that as of right now, the gas prices are not having much of an effect, at least for consumer spending. It's not holding them back. It's more of a psychological effect.
Got it. So the gas prices aren't hitting consumers yet. What about rising diesel prices? What's that doing to just generally the market? I mean, how does that impact the market when we see diesel go up? Of course, about 75% of everything we see in stores and even industrial goods, they're moved around by a truck that uses diesel generally.
That's right, Frank. I mean, that's where the inflation problem then bleeds into the rest of the sector. You see it first in the produce aisle, because obviously you're constantly refreshing the stocks there. But then the rest of the supermarket, and then the rest of retail. I mean, the profit margins start to get pinched because of the surcharges that then get tacked on by shippers as stuff gets brought to the store. And so that's going to be then the problem for the Fed. That's going to feed into this narrative about higher for longer in terms of interest interest rates because the Fed's going to have a greater inflation problem on its hands once again. And I would point out, though, too, as well, this is coming to us courtesy of Saudi Arabia, who has really leaned into this market, reducing production, reducing exports, trying to drive this price up because they claim the market's out of balance. It's not, but it's out of balance for them because the price isn't high enough for them.
All right, so give us a sense very quickly. What's your outlook? Are we going to see diesel prices go back or at least close to that record that we saw last year? If we see that happen, can it happen even with China having a soft economy and a lot of issues?
I don't think it's a lock, Frank, that it's going to go up. There's plenty of upside fears, but I think there's plenty of downside reality at the same time. The China situation is bad. U.S. exports of crude oil are now approaching 5 million barrels per day on a regular basis. That's a problem for the Saudis. So, no, I don't think it's a lock at all. And I think that we're going to hang in there. It's not going to explode to the upside.
Okay, not going to explode to the upside. Jharonne, I'm going to give you the last word on this. Not explode to the upside, but I think even John admits it's definitely moving higher, not at concern levels. How does this impact back-to-school shopping and the holiday season where, as you mentioned, retailers already given some pretty soft guidance?
Well, it's definitely going to help everybody gravitate towards those membership clubs, right? We've seen this in the past, though, that we've seen that they go to Costco, to Sam's Club, because they want to save money at the pump. Inflation is the reason why all the consumers gravitated towards Walmart during the second quarter, why we saw these strong numbers, why consumers are trading down. They don't want to pay the high prices.
Does it hit the holiday season, though? And back-to-school shopping is hard not to spend. Your kids need backpacks.
Right. Parents
they need
have budgeted
computers.
for it no matter what. But the holiday season, consumers will be spending. Services is still stronger than goods. But yes, as of right now, LSEG is projecting a healthy holiday season.
So growth year over year?
Yes, absolutely. Earnings are expected to grow double digits. Right now, we're seeing about a 19% growth in earnings for the second quarter, and that's projected to maintain into the holiday season.